So today I will teach you what exactly is an accounting cycle. Accounting cycle begins from a transaction and ends with a report, and a report which the stakeholders of the financial statement can use. So before beginning with an accounting cycle, a small concept that I want to indicate is accounting equation. Accounting equation is assets is equal to liabilities plus equity. Assets is equal to liability plus equity. What a business owns is equal to what a business owes. And the first step of this accounting cycle is recording the transaction in a journal. uh, any financial event that any financial event that has happened is to be recorded in a journal using a double entry system. We'll not go into the depths of debits and credits, but first step is journaling the financial transactions, and then that journal is posted into journal ledgers. Journal entries are posted into ledgers, and then those ledgers are used to make trial balance. Trial balance is nothing but the balances of the ledger. Ledger balances are collated in a trial balance, and then certain adjustments are made. For example, accrual adjustments are made, and then out of that trial balance we create what we see in those annual reports, of big companies: a balance sheet, an income statement, and a cash flow statement. So these three reports are generated out of the transaction that happened, and then for the next year to begin we need to close the books. So we what we do is we reset some temporary accounts. Like, what are the temporary accounts? Any account which is not reflected on balance sheet is a temporary account. For example, sales, purchases, these are held during the year, and once the year is over we reset their balances to zero. Now you will ask how the balance is reset to zero. By transferring their balance to a retained earnings account. We transfer their balance into retained earnings account, because ultimately sales minus income minus expenses profit, and profit belongs to equity, and retained earnings is a part of equity. Retained earnings is a part of equity. Hence we close all the temporary accounts by transferring their balance into equity, because ultimately they belong to the owner or the shareholders, whatsoever the case may be. And then we begin the next year with the balances, capital, liabilities, and assets. And then we start the same process from the next year, from step one. So this was the brief, very concise version of an accounting cycle. We will deep dive in each of these step by step. Let me know if it was helpful. Please share your reviews. Also, PS, this image in entirety was created on Notebook LM, but the inputs used were from my notes, my reference books. So, thank you for being watching till here.